Okay. 1-800-123 Fed. Jerome, yeah, hi. It's Joel again. Yeah, 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 yeah. Listen, I saw you just changed your rules, and I wanted to ask about my application again for my Jerome. Jerome. All right, so it might be a little bit longer before the Fed gives me a master account, it seems. Fingers still crossed on that one. But Jerome Powell has opened the door for other more reputable lenders. Is that good news for investors like you and me, though? We're going to try and figure that out and talk to some people who know a little bit more about that shortly. There is some good news too for crypto in Singapore. One company there is managing to make things work, even as others like Equinix are struggling. Plus, Tencent is getting out of NFTs, huh? So they haven't watched my NFT series then?
Join thousands of NFT traders who already start their day on CryptoSlam.
So, new rules from the Fed for crypto banks and how they can get into the central banking system. Potentially a very big deal. The US Federal Reserve's final guidance now details how to get access to its master accounts. Those accounts are needed to exchange money directly with the Fed and, by extension, the broader global banking system. Vice Chair Lael Brainerd said this will provide consistency and transparency for applications for these accounts, and that will help create a safe, inclusive, and innovative payment system. So, how important is this move towards acceptance of crypto banks? Well, David Roche from Independent Strategy has told Forecast the move will make the crypto and DeFi sectors play by the same rules as traditional banks if they're doing the same thing. He also added that will bring digital currencies more in line with CBDCs, but will also increase costs. Let's get another opinion from Andrew Sullivan of AsianMarketSense.com. Andrew, a pleasure to talk to you as always. I don't know whether it's fair to characterize this move from the Fed as overdue. I know some people will say that is literally the case, though. Can you give us an idea of how big a deal this move really is?
As you mentioned, some people feel it's overdue. Some people feel that the Fed is trying to it's almost like a land grab between the different agencies in the US as to who's going to really be, in control of this. You've already seen the SFC kind of put their hand up to try and regulate part of it. To be fair, Powell has always been pretty much anti these sort of currencies, but he's really been sort of backed into a corner because of what China has actually managed to achieve already. And the threat that could pose longer term to the dominance of the US dollar effectively. If people go down cryptocurrencies and the Fed haven't got anything, then they're going to be behind the curve.
Can you also explain to us, Andrew, a little bit about the significance of this master account, what the implications would be for lending, both in terms of traditional financial institutions, banks in particular, but also crypto as well?
It depends how much involvement the central bank really wants to have. Typically, it is the high street banks that lend people money. The Fed may print it, but actually it's the Goldman Sachs, the JP Morgans, those are the guys that really distribute that money into the general economy. It's not the central bank per se. With crypto, though, they could do that. They could look directly at your account and say, yes, you need the money, we can put it into your account, or they can say, no, you've got enough wealth, we don't need to. But that means that they take on a huge responsibility as to monitoring all those accounts. In China's case, the central bank wants to do it because they want to control where the money goes, they want to know what people are doing with the money, and they want to be able to target it. The Fed is probably at the other end of that range in so much as it doesn't want to be seen to be quite so authoritarian about other people's money.
So are you saying, Andrew, that the Fed's much more concerned not necessarily about its own economy and the implications on crypto lending, but rather about getting behind the curve on where China stands?
I don't think the Fed really wants to get involved in crypto per se. It kind of wants to be able to say, okay, we've got a digital currency, so we understand how it works. And as the financial system for the US goes, we can implement a digital US dollar, and that helps us to compete with China. So I think what they're trying to do is get an overlay for a banking system that uses crypto type currencies, with whether that's a central bank currency or Bitcoin or Ethereum or whatever, so that we can have a template there for how they should be regulated, and the stop gaps behind that, what they're allowed to do and what they're not allowed to do. But it's also, I think, saying that, we're not in a position to really regulate crypto.
All right. Thanks so much for that, Andrew. Andrew Sullivan talking to us there. Now, exchanges and lenders have been hit hard by the crypto winter, but while some have fallen by the wayside, one seems to have sensed an opportunity. Slumping trade volumes, of course, saw Equinix earlier this week decide to close its crypto exchange. Others, though, like ZipMex and Hodlnaut, have asked for protection against creditors while they work on restructuring. However, Singapore-based Coinhako says it's planning to expand, and that is despite the company saying the cost of compliance in the Lion City is on the rise. Forecast predictor Mukherjee has more details for us.
Coinhako was founded in 2014 and has traditionally kept its focus to the local market in Singapore. But that is set to change. The exchange told Forecast it's looking to expand over the next 6 to 12 months.
We are actually looking to see how we can expand beyond the Singapore market. So we have traditionally been very focused on the Singapore market because we are Singaporean entrepreneurs, the founders are Singaporeans. It's a Singaporean-led and Singaporean-grown business, right? Having, I think, done quite well in the Singapore market, we are now looking to capitalize on that foundation to expand into the region.
Cheong says there are a few ways the company is thinking of achieving this goal.
Some kind of acquisitions is definitely on the table. If not, because we have the tech, the operational, and the regulatory experience dealing with a tier 1 regulator like MAS in Singapore, we do have the expertise to go into the different markets to set up our own shop as well. So that's we're toying with a few approaches right now, either going in ourselves, partnering with someone, or an acquisition.
Over 80% of Coinhako's current clients are retail traders. However, the company also plans to tap into institutional traders like family offices and traditional financial institutions.
Because of our background and expertise serving the mass market already, we can take some of that learning experience to now tailor a solution that we think will work for these clients.
Cheong says the company's experience in dealing with a stringent regulator like the Monetary Authority of Singapore, or MAS, gives it the confidence to tackle regulatory practices in other Asian countries as well. The MAS has repeatedly warned the general public against crypto trading, and last month it said it would further strengthen regulation to cover issues like consumer protection. Coinhako is one of the few exchanges to hold a major payment institution license in Singapore. Cheong says that while the cost of compliance has gone up, both regulation and compliance are important as they give investors confidence.
If we look at how the regulatory landscape is changing, the regulators are increasingly focused now, having put in place at least a framework to regulate CFT and AML risks, to now look at consumer protection. And I think that's where the puck is moving. Platforms like ourselves need to ensure that there are certain standards in place to ensure users understand the risk of engaging in crypto assets or digital assets in general, and educating users as well.
As for concerns over the crypto winter, Cheong says that as Coinhako has been around since 2014, it has already experienced the ups and downs of the market and learned how to handle them.
Because of our experience, we have made sufficient provisions for a time like this where a bear market hits the crypto industry. So I think it's important that any player that's coming to the market or still in the market recognizes that that in crypto bear market, there are going to be bear markets in the crypto space, just like any industry, and to have sufficient provisions for that.
I am Pradipta Mukherjee, Forecast.
Compliance is also a concern for Huobi. Only months after launching in New Zealand, the Seychelles-based crypto exchange is stopping crypto derivatives trading services in the country as of August the 23rd. Huobi said the decision was made to adhere to local compliance policies. The exchange only began operating in New Zealand in June after announcing it was registered with the country's financial services provider. Huobi is banned from providing any services in 11 jurisdictions, including the United States, Canada, and Japan. Now, Tencent's NFT marketplace is no longer a marketplace. Huanhe says no more NFTs will be issued and that buyers can get a refund on any NFT items that they bought there. The app will remain, though customers, however, will only be able to display, download, and share NFTs that they already own. The platform only went live in August last year and had experienced some fairly slow sales levels since June. Authorities in China, meanwhile, have consistently been warning about speculation over NFTs, and Huanhe was one of the few platforms that never allowed secondary sales. And finally, a reminder that Forecast's next Crypto Rising livestream event is just over a week away. It happens at 9 p.m. Eastern, August the 25th, 9 a.m. Hong Kong time, August the 26th. That is when some of crypto's most influential figures across Asia will be sitting down with Forecast Editor-in-Chief Angie Lau and Sean Lee from the Crypto Council for Innovation. They'll be discussing navigating the new regulatory landscape. You don't want to miss out. Sign up at forecast.news and make sure to join us on the day. That is it from us for today, though. Like and subscribe to this video for more content like it and let us know your thoughts on what's happening in the comments.